Hi, welcome back. In this video, we are discussing about Kerala Agriculture Tax Act. So this is an at a glance exam-oriented video, not a detailed one. So going to the video, the Kerala Agriculture Income Tax seeks to levy tax on agricultural income in the state of Kerala. The act repeals the earlier Kerala Agricultural Income Tax Act of 1950. So the present statute has come repealing the earlier one, that is the 1950 Act. The act aims to tax agricultural income mostly from cash crops such as cardamom, cashew, nutmeg, pepper, coconut, arganut, tea, and coffee, etc. Now, it is to be noted, it is only the income from cash crops. So there are some kind of crops, the income from which is not calculated or computed with agricultural income. Now, from people holding the income from such cash crops from people holding agricultural land in excess of 5 hectares. So this is also to be noted. So the act aims to tax agriculture income mostly from cash crops from people holding agricultural land in excess of 5 acres, 5 hectares. Paddy crops and people with small holdings less than 5 hectares are exempted from the agriculture income tax. So if you are getting income from cash crops and you are holding an agriculture land of above 5 hectares, then you become liable for tax liability in agriculture income tax, Kerala agriculture income tax. But if the person, paddy crops and people with small holdings less than 5 hectares are exempted from agricultural income tax. Now, agricultural income. Agricultural income is defined as any rent or revenue derived from land used for agricultural purposes. It can be any income derived from such land through agriculture or the performance by a cultivator or receiver of rent in kind of any process ordinarily employed to render the produce raised or received by him to take the crop to the market to make it fit for the market. Now, this third one is any income derived from such land by the sale of the cultivator or receiver of rent in kind of produce raised or received by him. Further, any income derived from any building owned and occupied by the receiver of the rent or revenue of any such land, provided the building is on or in the immediate vicinity of the land and is used as a dwelling house, storehouse, or other outbuilding by the cultivator. So, revenue from either of this, that is either by agriculture or revenue as a rent of kind, that can be from the land or by doing any process or performance that is ordinarily done for making the crop marketable, or from the rent or the land which has building which is a building which is used as a storehouse or dwelling house, provided that is in the vicinity of the agricultural land. So any income from either of this will be brought under agricultural income. Now, assessee. Assessee means a person by whom any tax or any other sum of money is payable under this act, and includes the first one, every person in respect of whom any proceeding under this act has been taken for the assessment of his income or of the income any other person in respect of which he is assessable. So any act against a person for his own income for or for the income of any other person for which he's responsible, or he will be as a deemed assessee, or of the loss sustained by him or by such other person, or of the amount of refund due to him or such other person. So an assessee, he may become assessee not only on his personal capacity, but there are situations where he may be a deemed assessee and be liable for tax for some other person too. And the second one is every person who owns or possesses any land in which any crop is grown, the agricultural income of which is liable to tax under the provisions of this act, either on his own account or on account of others. And the third category is where a person who is deemed to be an assessee under any provisions of this act. And the fourth one is every person who is deemed to be an assessee in default under any provision of this act. So that is how assessee is defined. So it is to be noted that a person becomes assessee and becomes responsible for tax liability not only for his own income or income from his own agricultural land, but there are circumstances where he will be responsible for the income of others too. Now, the next one is total agricultural income. So we have some list which says what comes under agriculture income and what does not come under agriculture income. So total agricultural income comprises of income from all agricultural income derived from the land situated within the state and received by the taxpayer within or outside the state. So here it is received by the taxpayer within or outside the state, but the land is within the state. The second criteria is amount received from Indian Coffee Board in respect of coffee delivered in any year of sale in pool auction. The third category is cash or reimbursement received in respect of any document made in the assessment for any year for loss, expenditure or liability. And the next criteria is any amount received in the previous year in respect of bad debts written off in previous year. So all this comes under total agriculture income. So that is income from agricultural income derived from the land within the state, but the taxpayer may or may not be within the state. Now the next one is the amount received from Indian Coffee Board in respect of coffee delivered, that is from a sale in pool auction. Then cash or reimbursement received in respect of any deduction made in the assessment for any year of loss, expenditure or liability. Then the fourth one is any amount received in the previous year in respect of bad debts written off in previous year. So these are the four criteria which says that what is comprising of total agriculture income. Now it also says while these four criteria used in inclusive, there are some exclusions, that there are some things that is not included in total agriculture income, and those are any agriculture income derived from land situated outside the state. The second one is any agricultural income derived by cultivation of paddy, tapioca, plantain, ginger, ragi, pulses, sesame, vegetables, sweet potato, tubers, sugarcane, jackfruit, mango, pineapple, orchid, or other flowers, vanilla, turmeric, and guava. So any income from the agriculture or cultivation of these crops is not brought under agriculture income. We discussed earlier that is of cash crops and non-cash crops. Now, the third criteria is share income received by a partner from any firm on which tax has been paid by the firm. So that is also not included in total agriculture income. So towards the computation of agriculture income, the agriculture income of a person shall be computed after making the following deductions. So what are the allowable deductions here? So the first one is expenses incurred for cultivating the crop and transporting the crop to the market. Expenses, second one, expenses incurred on the repair and maintenance of capital assets, plant, machinery, agriculture implements, etc. Now the third one, the cost incurred in the previous year in the purchase or replacement of cattle or implements which are necessary for cultivation. The fourth one, amount spent on irrigation or projective work. Protective work. Now the fifth one, sum paid to an employee as bonus or commission for services rendered and other expenses such as replantation allowances. Now the sixth one, sum paid for land revenue, cess, municipal tax, etc. Now seventh one, any tax, cess or rate paid on cultivation or sale of the crop from which agricultural income is derived. And the eighth one, interest paid on any bad debt for acquiring the land. Now the ninth one, interest paid on agricultural loans. The 10th one, interest paid on amount borrowed for reclaiming, improving or cultivating the property. Now, number 11 is bad debt in the previous year, subject to conditions. And the 12th one, insurance against loss or damage of crops, building, machinery, plant and furniture, workers' insurance, etc. So, in a summary, we can say that in allowable deductions, we have some expenses that is for the transportation cost or the expenses for replacing the machinery, for the improvement in the land, then the cattle for the purpose of agriculture, such expenses, the cost incurred, and the taxes paid with respect to land revenue or for the yield or the crops of the agricultural land, then the interest paid with respect to a bad debt or for acquiring of the agricultural land, the bad debt is subject to conditions, and then the insurance premium paid for the insurance for the against loss of damage of crops, building machinery, etc. Such expenses, cost or tax paid, interest paid, etc. is allowable deduction. Now, in further to this, gratuity and bonus paid for the submission of return will be allowed as deduction in the previous year to which the return relates. So, in case of any deduction towards gratuity or bonus, the deduction shall be allowed in the year in which the actual payment is made to the employee or to any fund recognized in this behalf by the government, irrespective of the method of accounting employee less any deduction already allowed in the previous year or years in respect of the employee. So, what is material here is gratuity and bonus before submission of return is an allowable deduction, but immaterial of other facts, it should be calculated or computed with the year in which it is paid. That can be either to the employee or to any organized fund organization recognized by the government. Now, the next we have is amounts not deductible. So, for computation of agriculture income, just now we discussed about what are the allowable deductions. And next we are going to see what amounts are not deductible. The following amounts shall not be deducted in computing the agriculture income. So, that is in section 6. So, amounts not deductible is in section 6. The first one, any sum paid on account of any rate or tax levied on the agricultural income. And the second one, any sum by way of interest, salary, bonus, commission or remuneration paid by the firm to any of its partners. The third one, in case of any private limited company, any expenditure incurred which results directly or indirectly in the provisions of any remuneration or benefit or amenity or perquisite to an employee, which in the opinion of the agricultural income tax officer, any expenditure or allowance is excessive or unreasonable, having regard to the legitimate needs of the company for deriving agricultural income and benefit derived by or acquiring to its therefore. Then the fourth one is the agricultural income tax officer may disallow any deduction which seems unreasonable or in excess of fair value normally incurred for such expenses and services. So that is with amounts not deductible. Now we also have depreciation allowances, that is in section 7. So depreciation allowance is allowed for building machinery, plant and furniture in accordance with the laid down rules in addition to the other listed deductions, and if such depreciation is not claimed under income tax. So members of an association who receive income tax has already been paid need not pay tax again for such amount, and that is discussed in section 8. That is section 8 says that members of an association who receive income for which tax has been already been paid need not pay tax again for such amount. So that is against double taxation, similar to the principle of double taxation, that If you have paid the tax for the particular income once, you don't have to pay it again. So that is said in section 8. Now, carrying forward of laws. That is in section 12, carrying forward of laws, where any person sustains a loss as a result of computation of agriculture income any year, in any year, the loss shall be carried forward to the following year and set off against the agriculture income of that year. And if it cannot be wholly set off, the amount of loss not so set off shall be carried forward to the following year, and so on. But no loss shall be carried forward for more than 8 years. So carry forward is limited to 8 years. Now, relief from double taxation. That is discussed in section 15. Any person who is a member of an association of persons or body of individuals is not liable to pay tax on the share of agricultural income which he received as a member of such association of persons or body of individuals on which tax was levied and paid by such association of persons or body of individuals. So this can be read along with section 8. Both seems very similar. That is section 8 and section 15. In section 8, the tax is paid by the person itself. In section 15, the tax is paid by the association of persons. Now, charitable trust and institution. Charitable trusts and institutions. That is in section 16. So, the total agriculture income of any charitable trust does not include 1. Any agriculture income derived from property held under the trust wholly for charitable or religious purposes, to the extent to which such income is applied to such purposes in the state, and where any income is accumulated or set apart for the application of such purposes in the state, to the extent to which the income so accumulated or set apart is not excess of 25% of the agriculture income from such property. So this is the case where charitable trusts and institutions on agricultural land, and there is the income from the agricultural land. So there is an exemption there. That income doesn't come under agriculture income so far as they use it for the purpose of the charitable institution or the trust or accumulate out given to the state. But there is also a limit set here, to the extent to which the income so accumulated or set apart is not in excess of 25% of the agriculture income from such property. So it should not be more than 25% of the income from such property. Now, the second condition here under charitable trust and institutions, section 16, is any agriculture income derived from property held under trust in part only for such purposes, to the extent to which such income is applied to such purposes in the state, and where any such income is finally set apart for the application to such purpose in the state, to the extent to which the income set apart is not excess of 25% of the agriculture income from such property. So under section 16, we have clause A and clause B, where clause both are similar. Clause A discuss about the agriculture income for the charitable or religious from the land owned for charitable or religious purpose, and in section B discuss about from agriculture income from the land owned by the trust. So that is the difference between section 16A and 16 subclause A and 16 subclause B. Both pertain to the same principle, and both have a limit set, that is the income so set apart shall not be excess to 25% of the agriculture income from such property. Now, income of individuals to include income of spouse, minor child, etc. So, in computing the total agriculture income of any individual, there shall be included all such agriculture income as arises directly or indirectly. So, the first one, to the spouse of such individual from the membership of the spouse in a firm carrying on agricultural operation in which such individual is a partner. And the second criteria, to a minor child of such individual from the admission of the minor to the benefits of the partnership in a firm in which such individual is a partner. Now, the third is to the spouse of such individual from assets transferred directly or indirectly to the spouse by such individual otherwise than for adequate consideration or in connection with an agreement to live apart. The fourth one, to a minor child not being married daughter of such individual from assets transferred directly or indirectly to the minor child by such individual otherwise than for adequate consideration. And the fifth one, to any person from the asset transferred otherwise than for adequate consideration to the person by such individual to the extent to which the agricultural income from such asset is for the immediate for deferred benefit of his or her spouse or minor child. A minor child not being a married daughter or both. So that is where the income of individual to include income of spouse, minor child, etc. So in these five conditions, the income of the other person is also calculated with the SSE. Now, we are going to discuss about the agricultural tax authorities. So who are the tax authorities under agriculture income tax? So there shall be the following classes of agriculture income tax authorities for the purpose of the act, namely the Land Revenue Commissioner, the Commissioner of Agriculture Income Tax, Deputy Commissioners of Agriculture Income Tax, Inspecting Assistant Commissioners of Agriculture Income Tax, then Agriculture Income Tax Officer, and agriculture income tax inspectors. So these are the authorities we have under agriculture income tax. Then we have jurisdiction of agriculture income tax officer. Now, the agriculture income of a person shall be assessed by the agriculture income tax officer of the area in which it is situated, the greater part of the land from which the agricultural income is derived. So since we are discussing about a huge portion of land, if we are consider that the area in which the larger portion of the land is situated, that area's agriculture income tax officer will be assessing that assessee. Where an assessee has made a return to the agriculture income tax officer having jurisdiction over the assessee's place of residence or the place where any of his land is situated or where his accounts are maintained, he shall be deemed to have elected such place as his place of assessment. So, the assessee can also elect the place of assessment, and it shall be accepted by the officer concerned unless such officer passes an order that the assessment shall be made in any other place for reasons to be recorded in writing. Now, an assessee who has not made a return under section 35 may, before the expiry of the time allowed for the submission of the return, apply to the agriculture income tax officer of the area in which the greater part of the land from which the agriculture income is derived to be assessed at his usual place of residence or at the place where the accounts relating to his agriculture income are kept, if either of such places is situated in the state, and the agricultural income tax officer shall refer that matter to the commissioner whose decision thereon shall be final. So the final decision is from the commissioner. The assessee makes the application to the agricultural income tax officer and he shall forward this refer it to the commissioner, and the decision of the commissioner becomes the final decision. Now, where in respect of any proceeding under this act an agriculture income authority ceases to exercise jurisdiction and is succeeded by another agriculture income tax authority, the agriculture income tax authority so succeeding shall continue the proceeding from the stage at which the proceeding was left by his predecessor. So that is with jurisdiction of agriculture income tax authorities. Now we have return of agricultural income, that is discussed in section 35, return of agriculture income. Every person liable to file returns or pay shall furnish the returns to the agriculture income tax officer so as to reach him before the 1st July every year. So the return should reach him, that is the agriculture income tax officer, before 1st July every year. The return shall include a cross check or receipt from government treasury worth the full amount of taxable income included in the return. Now, if the assessing officer requires further details, notice may be served on the assessee for a hearing, with a period of limitation is 2 years. If the agriculture income tax officer is satisfied that the return furnished under section 35 by an assessee is correct and complete, he shall by order in writing make an assessment and determine any extra the sum payable to the assessee on the basis of such return. If a person does not If a person does not file a return or does not appear for hearing, the assessing officer can make an assessment on the basis of the available information. Every person other than a company or a person who has to get his accounts audited in accordance with section 34, who is liable to pay tax under this act, and every person to whom a permanent account number, that is PAN, is allotted under section 36 till his permanent account number is withdrawn, shall furnish to the agriculture income tax officer so as to reach him before the 1st of July. In the case of a person who has to get his accounts audited in accordance with section 34 or on or before 31st of October, and in case of company on or before 31st of December of the assessment year, a return in the prescribed form and verified in the prescribed manner, setting forth his total agriculture income or the total agriculture income of any other person or total extent of landed properties in his name or in the name of such other person, in respect of which he is accessible to tax under this act during the previous year, shall be submitted. In case of any person who, in the opinion of the agriculture income tax officer, is accessible to tax under this act, whether on his total agriculture income or on the total agriculture income of any other person during the previous year, the agriculture income tax officer may, before the end of the relevant assessment year, issue a notice to such person and serve the same upon him, requiring him to furnish within 30 days from the date of service of the notice a return of his agricultural income or of agriculture income of such other person or total extent of properties in his name or in the name of such other person during the previous year in the prescribed form and verified in the prescribed manner, and setting forth such other particulars as may be prescribed. So when the agriculture income tax officer is issuing a notice and demanding for filing of returns, it shall be done within 30 days. Now, permanent account number, that is PAN section, that is discussed under section 36. Every person, if his total agriculture income or total agriculture income of any other person in respect of which he is accessible under this act during any previous year exceeded the amount which is not chargeable to tax under this act, and every person liable to pay tax in accordance with the provisions of section 13, if he has not been allowed a permanent account number, shall within such time and in such manner as may be prescribed apply to the agriculture income tax officer for the allotment of a PAN, and he shall allot an account number to the applicant within such time as may be prescribed. The agriculture income tax officer may also allot to any other person by whom tax is payable a PAN. Now, self-assessment and payment of advance tax, that is discussed under section 37. Every person liable to furnish a return shall apply advance agricultural income tax on or before the end of February of the previous year on the estimated total agriculture income, which shall not be less than 80% of the total agriculture income as per return. So here advance tax is paid on the estimated total agriculture income, and that should be on or before the end of February of the previous year, and this estimated agriculture income shall not be less than 80% of the total agriculture income as per the return. Every person liable to pay tax under section 13 shall pay the tax for the previous year calculated on the extent of the landed properties held in accordance with section 13 before the end of February of the previous year. Advance tax may be refunded or set off against the future taxes. Every person liable to furnish a return under section 35 or section 41 before furnishing the return shall pay the tax due on the total agriculture income derived during the previous year after deducting the advance tax already paid by him. Any person who fails to pay tax in accordance with the section or in pursuance of a demand notice issued under section 45 shall pay simple interest at the rate of 12% per annum for every month of delay or part thereof on the unpaid balance tax. The commissioner may reduce or waive the interest payable by any person if the commissioner is satisfied that there was sufficient reason for the non-payment of tax in time. And the next is assessment of agricultural income, that is in section 39. If the agriculture income tax officer is satisfied that a return furnished under section 35 by an assessee is correct and complete, he shall by order in writing make an assessment and determine the sum payable by the assessee on the basis of such return. If the agriculture income tax officer considers it necessary or expedient to verify the correctness and completeness of the return by requiring the presence of the assessee or the production of evidence in this behalf, he shall serve on the assessee a notice requiring him on a date to be specified therein either to attend the office of the agriculture income tax officer or to produce or to cause to be produced any evidence the assessee may rely in support of the return. On the day specified in the notice issued under subsection 2 or as soon as may be, the agriculture income tax officer, after considering the evidence as the assessee may produce and such other evidence as the agriculture income tax officer may require on specified points, and after taking into account all relevant information which he has gathered, shall, by an order in writing, make an assessment of the assessee and determine the sum payable by him or refundable to him on the basis of such assessment. If any person fails to furnish the return as required by section 35 or fails to comply with the notice issued under subsection 4 of section 35, or having furnished a return fails to comply with all the terms of the notice issued under subsection 2, the agriculture income tax officer, after taking into account all relevant information which the agriculture income tax officer has gathered, shall make the assessment to the best of his judgment and determine the sum payable by the assessee on the basis of such assessment. Now, no assessment under this section other than an assessment under subsection 1 shall be made without giving the assessee a reasonable opportunity of being heard. So, the first category is where if the agriculture income tax officer is satisfied that a return furnished under section 35 by an assessee is correct and complete, he shall by order in writing make an assessment and determine the sum payable by the assessee on the basis of such return. Only in this case, a giving of a notice is not mandatory. For rest of the cases, the assessee should be given a reasonable opportunity of being heard. So for all other case scenarios, the assessee should be given a reasonable opportunity of being heard. Now, the sixth clause is that, subclause 6 is that any assessment other than those pending on the date of commencement of this act shall be completed within a period of 2 years from the date of filing the returns. So that is with assessment of agriculture income with respect to section 39. Now, assessment of persons transferring property, that is section 57. Section 57. Where a person in receipt of agriculture income from any land in the state is found to have transferred his interest in such land to another person, the transferor and the transferee shall each be assessed in respect of his actual share, if any, of such agriculture income. When the transferor cannot be found, the assessment of such agriculture income of the previous year in which the transfer took place up to the date of the transfer and for the years preceding that year shall be made on the transferee in like manner and to the same amount as it would have been made on the transferor, or when the tax is in respect of the assessment made before or after the transfer for any or all of such year assessed on the transfer or cannot be recovered from him, it shall be payable by and recoverable from transferee. So all the liability, that is existing liability of the transferor, comes to the transferee when the transferor cannot be found. And the transferee shall be entitled to recover from the transferor the amount of any tax so paid. So the transferee has a right of indemnifying, a right of being indemnified. But as for the tax collection, the liability of the transferor is shifted to transferee when the transfer cannot be found. That is Assessment of Persons Transferring Property, Section 57. Now, an assessee transferring his interest in any land in the state to another person shall give the agriculture income tax officer a notice of such transfer within 15 days thereof. So, after the transfer, within 15 days, the notice shall be given to the agriculture officer. And if the transferor, when such a transfer takes place, the transferor and the transferee both are assessed to determine their share of the agriculture income with respect to that land. And when the transferor cannot be found, all his liability is shifted to transferee and he shall pay the tax. But the transferee has a right to be indemnified by the transferor from the transferor. Now, payment of tax, penalty, etc. That is discussed in section 62. So, assessment of persons transferring property was in section 57 and payment of tax, penalty, etc. is in section 62. Any amount specified as payable under this act other than interest accrued shall be paid as specified in the notice of demand under section 45, which shall not be less than 30 days from the date of order of such payment. So it shall be done within 30 days from the date of order. Now, if the amount is paid within the time specified, the assessee shall be deemed to be in default. That if the amount is not paid within the time specified, the assessee shall be deemed to be in default, provided that an assessee shall not be deemed to be in default if he has complied with any order or direction of the appellate or revisional authority regarding the payment of tax when an appeal or revision is pending before such authority. So that is the exception here. Exception to be assessee in default, the liability of default, where during the pendency of any proceeding under this act, any assessee creates a charge on or parts with the possession by way of sale, mortgage, exchange, or any other mode of transfer whatsoever of any of his assets in favor of any other person with the intention of evading payment of tax or other some such other sum, such charge or transfer shall be void. So if the assessee is making a transfer of interest, that is can be a sale, mortgage, or exchange for tax evasion, then such a transfer will be considered void against any claim in respect of any tax or any other sum payable by the assessee as a result of the completion of the said proceeding. Now, with that, penalty payable when tax in default. So we discussed when a assessee will be in default, deemed to be in default, and the exception to that when he won't be considered to be in default even though he has not paid within the time specified. And next is penalty payable when tax in default. That is in section 63. When an assessee is in default in making payment of tax, he shall, in addition to the amount of the arrears and the amount of interest payable under subsection 4 of section 37, be liable by way of penalty to pay such amount as the agriculture income tax officer may direct. And in the case of continuing default, such further amount or amounts as the agriculture income tax officer may from time to time direct. So, however, that the total amount of penalty does not exceed the amount of tax in arrears. So, the only restriction here is the total amount of penalty does not exceed the amount of tax in arrears. Now, refunds. So, refunds is discussed in section 68. If any person satisfies the agriculture income tax officer that the amount of tax paid by him for any assessment year exceeds the amount with which he is properly chargeable under this act for that year, he shall be entitled to refund of the excess amount so paid. Where, as a result of any order passed in appeal or other proceedings under this act, refund of any amount becomes due to the assessee, the agriculture income tax officer shall, except as otherwise provided in this act, refund the amount to the assessee without his having made any claim in that behalf. So refund, even if the assessee has not made a claim, he is entitled to get it back. Now, if any advance tax paid by any person in accordance with Section 37 is found in excess of the amount properly chargeable under this Act for the year, he shall be entitled to a refund of the excess amount so paid. If any refund due under this section is not paid within 3 months from the date of the receipt of the order by which the claim for refund has arisen, simple interest at the rate of 15% per annum is to be paid to the assessee on such amount from the date of expiry of the said 3 months. So, if there is any default from the authorities, a claim can be raised, and from the expiry of 3 months, the assessee is entitled for simple interest at the rate of 15% per annum with respect to the refund amount. Now, the appellate tribunal, that is in section 73, the appellate tribunal. The government may appoint an appellate tribunal consisting of a chairman and as many members as may be necessary to exercise the powers and discharge the functions conferred on the appellate tribunal by this act. The chairman shall be a person who is or has been or is qualified to be appointed as a judicial officer not below the rank of a district judge, and other members shall possess such qualifications as may be prescribed. Any vacancy in the office of a member of the appellate tribunal shall be filled by the government. The functions of the appellate tribunal may be performed, that is, 1. By a bench consisting of the chairman and any other member or members of the tribunal constituted by the chairman, or 2. By a bench consisting of 2 or more members other than the chairman constituted by the chairman. The chairman or any other member of the appellate tribunal nominated by him may, sitting single, dispose of any case which pertains to an assessee whose total agriculture income as computed by the agriculture income tax officer does not exceed 50,000 rupees and all cases of assessment under section 13. So a single person can dispose of any case if the uh, total agriculture income computed by the agriculture income tax officer does not exceed 50,000 rupees and all cases of assessment under section 13. If any case which comes up before the bench consisting of a single member or a bench consisting more than one member of which the chairman is not a member involves a question of law, the bench may in its discretion or where the total agricultural income assets exceed rupees 1 lakh, the bench shall reserve such case for the decision by the bench to be constituted under subsection 4 of which chairman shall be a member. So here in one situation it is the discretion of the bench and in another situation it is mandatory. So involves question of law, the bench may in its discretion or when the total agriculture income is excessive of 1 lakh rupees, the bench shall, so there is a mandatory, reserve such case for decision by bench to be constituted under subsection 4 of which the chairman shall be a member. Any member who has previously dealt with any case coming up before the appellate tribunal in any other capacity or in personally is interested in any case coming up before the appellate tribunal shall be disqualified to hear that case. This is based on natural justice principle. No one can be a judge of his own case. Now, appeals to the appellate tribunal is discussed in section 74. An assessee agreed by any of the following orders may appeal to the appellate tribunal against such order. 1. An order passed by the Agricultural Income Tax Officer or the Inspecting Assistant Commissioner. The second one, an order imposing a penalty by an Inspecting Assistant Commissioner or Deputy Commissioner. The third one, any order referred to in subsection 2 capital A of section 72. Now, no appeal under section 74 shall be admitted unless at the time of presenting the appeal, the assessee has paid the tax due to the agricultural income admitted by him. So, unless the person has paid the tax, he cannot go for the appeal. So, that is very important. No appeal under section 74 shall be admitted unless at the time of presenting the appeal, the assessee has paid the tax due on agricultural income admitted by him. Now, every appeal under subsection 1 and subsection 2 shall be filed within a period of 60 days from the date on which the order sought to be appealed against is served to the assessee or to the inspecting assistant commissioner or deputy commissioner as the case may be. On receipt of notice that an appeal against his order has been preferred, the assessing authority or an officer authorized in this behalf by the government may, within 30 days of the receipt of the notice, file a memorandum of cross objection. So the appeal shall be filed within 60 days. And once the appeal is filed and the notice is received by the assessing authority or by a person in this behalf, that person within 30 days of the receipt of notice, that is receipt of notice, 30 days from the receipt of notice, file a memorandum of cross objection and the appellate tribunal shall consider the same while disposing the appeal. The appellate tribunal may admit an appeal or permit the filing of a memorandum of cross objection after the expiry of the period referred to in subsection 3 or subsection 4 if it is satisfied there was sufficient cause for not presenting it within that period. An appeal to the appellate tribunal shall be in the prescribed form and shall be verified in the prescribed manner and shall be accompanied by a fee of 700 rupees. So there is a fee of 700 rupees. Now settlement commission, that is section 74A. The government may appoint for a period of 1 year, please note, for a period of 1 year, a settlement commission consisting of a chairman and as many other members as they think fit to perform the functions assigned to the settlement commission by or under this act. The chairman shall be a person who is a judicial officer not below the rank of a district judge, and other members shall possess such qualification as may be prescribed. Any vacancy in the office of the members of the Settlement Commission shall be filled by the government. The functions of the Settlement Commission may be performed, that is, by a bench consisting of the chairman and any other member, or by a bench consisting of the chairman and two other members, or by a bench consisting of two or more members other than the chairman. Any member who has previously dealt with any case coming up before the commission in any other capacity or is personally interested in such case shall be disqualified to hear such case. The Settlement Commission may, with the previous sanction of the government, make regulations consistent with the provisions of this Act and the rules made thereunder for regulating its procedure and the disposal of its business. Now, powers of revision of the deputy commissioner suo motu, that is also under section 74A, that is the powers of revision of the deputy commissioner, which is suo motu. The deputy commissioner may of his own motion call for and examine the records relating to any order passed or proceedings recorded under this act by any officer or authority subordinate to him, which in his opinion is prejudicial to revenue, and may make such inquiry or cause such inquiry to be made, and subject to provisions of this act may pass such order thereon as he thinks fit. The deputy commissioner shall not pass any order under subsection 1 if, first condition, the order has been made the subject of an appeal to the appellate tribunal or of a revision in high court. And the second scenario is more than 4 years have expired after passing of the order referred to therein. So these are the two exceptions where the deputy commissioner cannot exercise the power of revision in suo motu. That is, one is if it is subjected to appeal or is in revision in High Court, or more than 4 years have expired after the passing of the order referred therein. No order under Section 74A adversely affecting a person shall be passed unless that person is given a reasonable opportunity of being heard. So the associate or the person who is affected by this, adversely affected by this, shall be given a reasonable opportunity of being heard. Now, powers of revision with Commissioner suo motu is discussed in Section 76. So, the power of revision for in suo motu for Deputy Commissioner is in 74A, and with respect to Commissioner, it is in 76. The Commissioner may, of his own motion, call for and examine the records relating to any order passed or proceedings recorded under this Act, which in his opinion is prejudicial to revenue, by any officer or authority subordinate to him, and make such inquiry or cause such inquiry to be made, and subject to the provisions of this Act may pass orders thereon as he thinks fit. The Commissioner shall not pass any order under subsection 1 if here three scenarios are discussed. The first one, the time for filing appeal against the order has not expired. The second one, the order has been made the subject of an appeal to the appellate tribunal or of a revision in High Court. And the third one, more than 4 years have elapsed after the passing of order referred to therein. So the restrictions for the deputy commissioner in making an order and commissioner in making order are similar, just that with respect to commissioner there is an additional restriction, that is, the time for filing an appeal against the order has not expired. So that is with the power of revision of commissioner as well as deputy commissioner in suo motu, and that is at a glance of Kerala Income Tax Act, and the predecessor of this was 1950 Act. So thank you one and all. Thank you for watching. Please like, comment, share and subscribe. Please support me so that I can keep making more videos. And if you have any feedbacks, do drop it in the comment box. Let me know your thoughts and your feedback. So once again, thank you one and all. Have a nice day. Take care. Bye.